Hey everyone, welcome back, and if you own Apple stock or an iPhone, you're going to want to stick around for this one, because things got a little bumpy on Wall Street today for the tech giant. So here's what happened. On June 9th, Apple shares took a noticeable hit in the stock market, and the reason behind it is actually pretty fascinating and a little ironic when you think about it. Apple's big AI-powered Siri update, which was supposed to be the company's shining moment in the artificial intelligence race, is now raising some serious questions among investors and analysts. And those questions are basically, this: is Apple's new Siri good enough to actually make people rush out and buy a new iPhone? Because if the answer is no, that's a real problem for the company's bottom line. Now let's rewind a little bit so this all makes sense. Apple has been under enormous pressure to prove it belongs in the AI conversation alongside companies like Microsoft, Google, and OpenAI. For the past year or so, the narrative around Apple has been, they're behind on AI, they need to catch up. So when Apple announced significant upgrades to Siri's smarter responses, deeper app integration, more natural conversation, there was genuine excitement. This was supposed to be Apple's big answer to all those critics. But here's where it gets interesting. The upgraded Siri features the really good ones, the ones Apple was showing off and making everyone excited about. Those aren't going to work on older iPhone models. We're talking about features that require the iPhone 15 Pro or newer hardware to actually run properly. So suddenly, instead of this AI update being seen as a gift to existing Apple users, it's being viewed by the market as a potential barrier, or worse, a gimmick designed to push people toward buying the latest and most expensive hardware. And investors? They started asking the uncomfortable question out loud. Will everyday consumers actually upgrade their phones just to get a better Siri? History tells us that AI features alone haven't historically driven massive upgrade cycles. People upgrade their phones for cameras, battery life, design changes, but my virtual assistant is smarter now? That's a harder sell, and Wall Street knows it. This uncertainty hit Apple's stock price today, with shares falling as traders and investors reassessed their expectations. The Motley Fool flagged this as one of the key market stories of the day, and honestly, it makes complete sense why. Apple is such a massive company, it's so deeply embedded in the S&P 500 and the Nasdaq that when Apple sneezes, the broader market catches a little bit of a cold too. Now, to be fair to Apple, this isn't a disaster. The company has proven time and time again that it can execute on hardware rollouts and create consumer demand where skeptics thought there wasn't any. Remember when people said the Apple Watch was unnecessary? Or that AirPods were overpriced? Apple has this remarkable ability to make people want things they didn't know they needed. But the difference this time is that AI is moving so fast. Google is improving its AI, Samsung is pushing hard on its Galaxy AI features, and consumers are more aware than ever about what AI can and can't do. Apple doesn't have the luxury of a slow rollout this time around. So the big question hanging over Apple right now isn't just about today's stock dip, it's about whether the company's AI strategy is genuinely compelling enough to drive the next big iPhone upgrade supercycle that so many analysts have been hoping for. And honestly, the answer to that question might end up being one of the most important stories in tech and in the stock market for the rest of this year.